Welcome back to Real Estate Mindset. Good morning. Happy Monday. And again, you guys, welcome to another live video with Mitch and I today. Now, today marks a very special live video because it's day one of a very special program that Mitch and I are rolling out. And basically the way that this program is going to work is on top of us doing our normal live, overwhelmingly valuable segments on, which is basically breaking down the stock market, breaking down the economy, breaking down the mortgage market, breaking down the housing market. And today I'm going to do a subdivision analysis. So on top of all of that, you guys, we're also going to start going over this document right here, which is Mitch's new document about 6 years of work wrapped into his new Amicus. So we're going to be going over about 2 to 3 pages per live video, and we're going to be doing 2 lives per week for the next month. And today what we're going to do throughout these segments is we're going to go over everything in yellow. Now, this is very, very important for you guys to take seriously because we want you guys to be equipped with understanding what's going on in the housing market and with property taxes. So on top of the Amicus, guys, we also created this quiz right here. You guys can go to my homepage. You could take this quiz. It breaks down everything that's going on with property taxes. And again, you guys, it's 100% free. We did it for you guys because we need you guys to be aware, because we need your support. So really excited to do that. Now, again, on top of that, I'm going to be issuing the questions to the quiz that I made for you guys for free. By the way, again, I want you guys to do that today. But every 3 days, I'm going to be doing a question on the post section on the YouTube channel. So again, we're going to make a huge push to make you guys aware of what's going on. We love you. We thank you guys for being here today. And before I really dig in, Mitch Vexler, good morning. Happy Monday. How are you, sir?
Good. Just watching the market and seeing what's happening, keeping an eye on things. Pretty interesting several days here, including a phone call that came in from Florence, Italy, from a very well-known person having to do with the Palisades in California. And I just want to point out that the Amicus is applicable across the United States. It's not just a Texas issue.
That's right. And we're going to start by looking at the economic calendar because we have actually a really big week for the economy. But I wanted to say good morning to each and every person that has said good morning, that has taken their time to learn and grow with us today. Justin, good morning to you. John, I hear you. Look at that. He's giving us some intel on silver. Good morning, sir. Dan, good morning. There's Don again. Good morning. Good morning. Good morning. There's my man, Vovo. I see you. Vovo. I love you, Vovo. I appreciate you being with us from the beginning. You should be an expert now, Vovo. I hope you learned a lot. Comment below. Let us know what you've learned. Good morning. Good morning, you guys. I really love to see you guys today. Hello, KW. It's nice to see you. Really love to see you guys. Good morning again, John. You guys don't know how much you guys uplift me to continue to fight and to advocate for our rights. Now, what I'm going to do is let's start with the economic calendar. And I'm going to go over and I'm going to show you guys what is happening this week. Let me just quickly turn my camera to this camera real quick. Now, this week, you guys, as far as today, nothing really happening today. The Empire State Manufacturing Survey comes out today. Everyone wants to know when the rate cuts are going to begin, right? We'll go over that. But on Tuesday, tomorrow, U.S. retail sales come out, industrial production, home builder confidence, a few other things here as well. A lot of things actually on Tuesday. But on Wednesday, and this is what you guys probably really want to be paying attention to, we're going to have housing start information, building permit information, and a rate decision from the FOMC. Now, on Thursday, we're going to have initial jobless claims, and on Friday, there's going to be a speech from the Fed as well, San Francisco Fed President Mary Daly. So for what it's worth, that's what's going to happen this week. Now, what I want to do before going into the market to show you guys the 1-year return on certain investments, let's listen to this video. I thought this would be an interesting video to start with today because this is how hedge funds are buying rental properties and creating an artificial value. Because remember, you guys, you need 3 comps to change the market value. Because remember, you guys, residential appraisals normally calculate 3 comps to determine what a value would be. So this is a great video that explains that. Listen to this video, and then we're going to jump into our market update.
They buy a whole housing, like a 500 house division, and they're going to get those at a huge discount because they only make 5 models and they buy everything in bulk. We might have had to pay $500,000 for it. They're getting them at $300,000. Okay, so they buy 500 houses at $300,000. Okay, they put them all in a portfolio. They could flip that through a secondaries market, but even better, they could hold those houses for a year. Don't let anyone move in. Keep it looking like a construction zone. Okay. And then a year later, they sell 3 of those houses that they bought for $300,000 to themselves in another fund for $700,000.
And they've just
And
more
that
than doubled
creates
there.
3 comps in the neighborhood. They do one of each of the models. Okay. And now the entire neighborhood, each house is valued at $700,000. And then they're going to turn them into obscene rentals. And simultaneously, they're going to have a double and a half value on that portfolio to borrow against.
Right.
And every American in that community was just priced out of everything around that community.
They're so smart. Aren't they just so smart the
They're
way
so
they do this?
disgusting.
They're so just clever the way
So
they do
clever.
this, isn't it?
They buy a whole housing, like,
All right, guys, let's get started on the market right now. What I'm going to do is go over the various indexes in the market, and I want to pay close attention to the 1-year return. On Friday, we'll do the week return because we can measure this week and see how everything's performing. But right now, again, I want you guys to focus on the 1-year return, and we're going to start with the Dow, and we're going to compare how everything is doing to one another to see what should have people invested in, right, other than themselves and paying their mortgage off. So here's the Dow right here. Now let's see how the Dow's opening. The Dow's opening a little tiny bit up right here, 0.1%. You guys can see that, but look at the 1-year return. So I want you guys to remember this 1-year return down here, 10%. So the Dow's up over 1 year, 10%. Okay, so not bad, right? It's more than a treasury note, but it's kind of highly, is it risky if it's just going up? I don't even know anymore, Mitch, to be honest with you. Let's keep going. I want to show you guys now the S&P 500, which is also up today, 0.37%. Now, the S&P over 1 year, you guys can see here, much larger gain than the Dow. So S&P up 17.3% over 1 year. That's actually a pretty decent gain. Now, look at this, you guys. This is really, really, the NASDAQ is killing it right now. So here's the NASDAQ also opening up 0.5%. Very nice to see that, I guess. But here's the 1-year return. So they are outperforming the rest of the market substantially because this is up over 1 year, 26.5%. So doing really good. But now let's look at metals and let's compare metals. So again, highest performing index, 26.5%. But when we look at silver, which let's see how it is right now. So silver is down about a half a point today. Holy smokes, you guys know that I purchased silver on a live video at $29. There was a massive downdraft. Mitch was like, if you want to get into silver, you should probably start a little bit at a time. If you can afford 100 ounces, get that. So I got about 100 ounces and I'm up $1,000 in about 3 months, which is really nice. But over 1 year, look at this, guys. Silver's up right now over 1 year. This is cool. 37.21%. A mindless rock is outperforming all of these economists and financial advisors in the market. A mindless rock is outperforming. But look at the year to date. So year to date, it's up 45%. Pretty crazy. But again, 1 year, 37%. Take a look at gold. Gold wins. Gold's up, actually, and I was surprised to see this, 41.3% over 1 year. Gold is on an absolute tear right now. Now, year to date, it's actually under silver, but year to date, it's up 40%. But over 1 year, again, 41.36%. So gold wins all of the investments that we just looked at. But now let's go into crypto and let's see how crypto is doing, starting with Bitcoin. Crypto. This is, crypto is really scary because this is potentially the new form of debt leverage and bubble creation. But regardless, you guys, Bitcoin is $116,000 this morning. And this is up over 1 year. You guys see this on the upper left right here. Bitcoin's up 93% over 1 year. Now look at XRP. Now, I really irritated Mitch. So Mitch, close your ears, okay? And please don't be upset at me. But I purchased a little bit, couple $100, few $100 of XRP, okay? Because I just wanted to have it so I could talk to you guys about how I'm doing with it. And also, I have no idea what crypto is, to be honest with you, but XRP is up 400% in 1 year. You guys see that? So XRP is at $305. I purchased it at $313. So I purchased it and then I immediately, it went down. But this, for me, I want you guys to understand, just like with my metals, it's a long-term hold. I want to have this 15 years from now. So either I'm going to lose all my money or maybe I'll make a whole bunch of money. But regardless, XRP is winning. Very interesting to see that. Let's keep going, you guys. The Dixie, the dollar continues to be devalued. It's sitting at $97.38. Now, that's close to a 52-week low. And I want you guys to remember the Dixie, the dollar, got to $110. Do you see that right there? So it has dropped substantially. But it can drop even more than this. This is what scares me about inflation. They can continue to rob us because they have the ability to continue to create inflation because they can continue to print money. And this shows me that they still have room to do that. Even though the Dixie's at $97 during the global financial crisis, this was in the 70s and 80s, because the rest of the world isn't doing well either. So when you compare the dollar to another currency, the other currency is doing worse. So it's not a fair comparison. But take a look at the inflation, you guys. I want you guys to remember, okay? So when we put $80,000 back in 2019, okay, and we compare that to today, or August of 2025, our $80,000, let's just look at how much inflation has happened since the lockdowns. Let's calculate how much $80,000 would be today had it not been for all of the inflation. So $80,000 today equals, this is insane, $101,378, okay? So that means that inflation went up 26.72%. It's probably more than that, to be honest with you. But again, we should be making about $21,000 more. They have robbed us of $21,000 in wages over the last 5 years. $21,000 in wages, you guys. That's, or 26% of our purchasing power and our workability. It's gone. They printed it away. If that doesn't make you upset, then I don't know what will. Now, as far as their inflation battle, they're not winning it. They're losing the inflation battle. We see this in the 5-year break-even inflation rate. They said it's 2%. If you guys look before the lockdowns, okay, so to the left of this horizontal line, that gray horizontal line, to the left of that, I'm sorry, the vertical line, to the left of that is what inflation was before the lockdowns, and it was low, 1.5. It was all under 2%. Look at this, a lot of 1.5s went up a little bit right here, and look at back in 2015, it was 1.3. So we are so far from this, it's crazy, and they stopped caring. We're at 2.42. This is 5 years from now. The market says 5 years from now, maybe they can get inflation to 2.42%. We are so doomed, you guys. We're so cooked, it's absolutely insane. But one of the reasons why inflation isn't going anywhere is what you see right here. We have an update. This is new information that you guys see on the screen. The deficit finally updated for last month, okay? And the deficit, this is to August now. The deficit went up to almost $2 trillion. We're sitting at a deficit right now of I almost said billion. I get confused, billion, trillion, because trillion just came up out of nowhere. We're sitting at $1.97 trillion in deficit. You guys, so the tariffs aren't working yet, right? The tariffs are not working yet because this is 4% higher than last year. And I know that's not a clean sweep, right? Because the fiscal year starts in October. So I know that this isn't completely the administration's fault, but I'm just letting you guys know the deficit's not going anywhere. All of this, polarizing things we hear in mainstream media, it doesn't even matter because nothing's changing. It's just getting worse. And again, when you go down here, the last time we had a deficit of $2 trillion was during lockdowns, 2021 and in 2020. Look at this. We're going to have the third worst year in history of deficit this year. Mark my words on that. And it's not just the deficit. See, the problem is we also have a mountain of debt. And that's another problem with the ISD bonds. We'll get there later. But look at this mountain of debt. This is the national debt over the last 100 years. It's absolutely skyrocketed. Now, if you're like me and you can't comprehend $1 trillion, because I can't comprehend that, look at the debt to GDP since 1940. The debt to GDP is a kind of a better thing to look at because it's looking at the percentage of debt to GDP, and it's astronomical right now. So there's no way around it. We are in a horrible inflation situation right now that is absolutely crushing us. Generation Z is all mad at boomers. Everyone's mad. Senior citizens are getting kicked out of the house. It's an absolute mess. But the question I have for you, Mitch, this week, okay, I know you're not a financial advisor. You're also on mute. This week, what do you think people should be investing in?
In reality, themselves, the safest place to be, shockingly enough, even if you don't know, but is to learn how to trade, because that opens your horizons. And you have to learn what it is that your personality likes. Some people like options. Some people like futures because they can trade them intraday and pick up on discounted values and ride it up. But that allows you to get control of your own finances such that you don't have to listen to all the noise that's out there. And even if you have a slightest little interest, I'd suggest that you go and look at FinViz, FINVIZ, map, MAP, and you will see a map of the stock market. And you can look at it, what Travis was just showing you, except that this is a color-coded map. And you can go back on a monthly basis, a daily basis, an intraday basis, and you can see which stocks are actually moving. So learning how to trade is one aspect of this. The other aspect of which is in your control would be to buy down your mortgage. If you say, okay, I'm going to invest a couple $100s a month and I'm just going to do this continuously and I'm just going to buy it down, you'll end up saving yourself about 7 or 8 years of payments off the amortization schedule. So there's things that you can do that are totally within your control, but trading will give you a completely different outlook on the way you see things in life. It's a good thing to do.
And maybe one day we'll have a program put together, Mitch, when it's safer out there and we can see like fundamentals. Maybe we'll put a program together to where we can actually train our viewers and show them how we're doing that, because I could tell you right now, I could use help on learning how to navigate the stock market for sure. Now what I'm going to do is let's shift and we're going to go into the first page of the amicus that we're going to cover, okay? And remember, you guys, the premise here is I want you guys to use this amicus. We want to get your support, and part of the way that you can support is if you guys agree with this amicus, you'll notice that in the description of this video, I created the address and a template of how to write a letter to the Texas Supreme Court. So again, in the video description, I told you who the address is, who to send the letter to, but what we are going to do is we're going to ask you guys to support this lawsuit, okay? This amicus is supporting the lawsuit, so we need you guys to write a letter. Please, you guys, it is in the description, but you got to know what's in this, so we're going to start reading a little bit of this. And again, you guys, take the quiz. So please take the quiz. Please send us a letter to them. But we're going to start by going to the first page right here, which is the opening statement. Okay, so I'm going to read this and then I'm going to have Mitch sum this up. We're just going to go a page at a time so it's not too boring. But here's the opening statement. And again, this is going to the Texas Supreme Court. Mitch has been doing so much, it's absolutely insane. Now, this case presents a constitutional question of statewide importance, whether systemic property appraisal fraud, when used to inflate tax rolls and underpin billions in school district bonds, may be insulated from judicial review under doctrines of administrative exclusivity. Okay, a comprehensive investigation has uncovered systemic municipal bond fraud across Texas. This is important you guys understand this next part, mirroring the SEC's successful 2022 prosecution of Crosby here in Texas, Crosby Independent School District. So this has already been happening. They've already caught people. The evidence reveals a statewide pattern of fraudulent property valuations and bond misrepresentation and threatens both state financial stability and national municipal bond market integrity. The Court of Appeals dismissal leaves property owners without a judicial forum to challenge documented fraud. Excuse me. Now, next issue here is documented fraud pattern. The evidence demonstrates a recurring and systemic pattern of fraudulent valuation practices by the Central Appraisal District, which is CAD. So remember, when we say CAD, C-A-D, that stands for Central Appraisal Districts. Consistent with prior enforcement actions in Texas. Now, Crosby ISD president, so this document is referring to the school district that got caught, a $20 million, that's a lot of money, bond issuance based on falsified financials and $11.7 million in concealed liabilities, and that's pattern and practice, resulting in successful federal securities prosecution. They're coming for you guys. It's only a matter of time. Not for you guys. I'm saying like the people that are corrupt. Now, the current evidence, a 15-year pattern of inflated valuations and misrepresentations, including the Salina ISD's $2.3 billion bond that was passed this year. Debt service ratios reveal mathematical impossibilities of repayment absent continued overvaluation, amounting to insolvency by design. The resulting harm, taxpayers face foreclosures, farmland is overvalued in violation of appraisal standards, and municipal bond investors rely on securities underpinned by false collateral. And the collateral is just forever guarantee of our taxes. There's no collateral. These facts establish the issue before the court, whether systemic appraisal fraud tied to municipal bond insurances can constitutionally be barred from judicial review by administrative exclusivity. Sorry. All right, Mitch, can you just break that down? Anything else you want to say there? And you're on mute right now.
So, yes, there's several things here. Some people have said, well, but the stock market is at an all-time high, so it can't be this bad. Let's get something straight. The stock market has absolutely zero to do with detecting the bond fraud and the real estate tax fraud. Why? Because it's not in their interest to do so. Everybody wants to paint a picture that the stock market is going to keep on moving up. Well, it doesn't happen like that. Trading isn't like that. That's why it's called trading. It moves up, it moves down. But one must recognize their own personal pocketbook and what are the ramifications of this problem. And mom and pop, their equity has been stripped. Second thing is that the Texas bond program, let's be very clear, it is insolvent. That's the case. This is all the evidence that we have found. This is the culmination, this document of everything that we have found. Now, it's a shorter form version, doesn't include the 1,100 evidentiary documents, but this was sent to the Texas Supreme Court. This document has got teeth. Then with regard to, there's a key word that Travis said, which is farmland. Well, the Secretary of Agriculture, her name is Brooke Rollins. People should be reaching out to her. If you're in the farming community, you should be hammering her office with get involved, because all the farmers that produce the food that we all eat are getting jacked over by virtue of the fact that their land, we have one here, 164,000 an acre on something that isn't worth 4,000 an acre. This is a serious problem because it goes all the way up throughout all these communities. With regard to the amicus, so far, not a single person in over 10 months has been able to say, okay, Vexler, you got this wrong. They can't. It's their own documents. It's the government's own documents, video, audio, written transcriptions. It's all there. It's on our website. So the fact that they can't come back and say you got it wrong means you must admit, people in office must admit we have a serious problem. The Attorney General themselves, and Travis will get into that in a minute, but the Attorney General themselves said, we don't have the documents. Well, that's an admission that they didn't do their job. And that's also in the amicus. So there's several things at play here, but these are all adding up to something that's very, very bad if we don't put a floor and a ceiling on this quickly.
So once again, you guys, please support us, okay? Take the quiz, go to the link, and please write a letter to support the amicus, okay? But now what we're going to do is we're going to go into our next segment, which is on the mortgage market. And we're going to show you guys all kinds of tricks that pertains to getting a mortgage and to paying off the debt. But before I do that, we're going to listen to this video right here that's going to talk to you guys about mortgage interest rates. And I want you guys to listen closely to this video. And as it's playing, tell me what she's saying that you would agree with or disagree with, because a little bit is nonsense, but some of it is valuable. And I'm hoping you guys are going to know the difference.
Months. This comes less than a week before the next Fed decision. Joining us now from the Zelman Housing Conference in Boston is CNBC senior real estate reporter Diana Olick. Diana, great to see you. What do you make of this drop, and what could 25 or 50 basis points in cuts next week do to the mortgage rate?
Well, Melissa, despite the two economic indicators we saw this morning, we only saw mortgage rates drop 2 basis points. So we're now at 6.27%. But inside the room across from me, you have hundreds of home builders, mortgage lenders, investors, land developers, and Ivy Zelman, one of the great analysts, putting up 87 slides literally on the state of the housing market. And what she pointed to was really that affordability as the main headwind and how that translates into mortgage rates buy downs. What she said was that 72% of the builders are now buying down mortgage rates. And she said that 1/2 of those rate buy downs are more than 100 basis points each. And that is going to continue to put pressure on builder margins. So the question is, how much longer can they do that? Because even though rates are considerably lower than they were just 6 months ago, you don't know that next week, if the Fed lowers rates, are mortgage rates going to pop back up a little again because they've already been priced in so early, Melissa?
So if they're buying down 100 basis points, does that mean that the mortgage that somebody's getting, if they're buying one of these new builds, is around 5%?
Yes, it is. And that's how the builders are getting their buyers in the door. And, you know, it's a lot of talk around here also is how much the builders are prepared. If rates do come down even more, do they have the supply? Now, we look at the supply of both new and existing homes, and it's very high right now because a lot of the builders, namely D.R. Horton and Lennar, have been doing a ton of spec building. That is building without a buyer as opposed to just buying on demand from specific buyers. Some builders think that's the right strategy. Some don't. I spoke to Ryan Marshall here. He's the CEO of Pulte. He says that is not what he thinks is the best strategy because you could get holding the bag on a lot of these homes if people still can't afford them. So the question is, do builders keep putting holes in the ground when they don't have the buyers? Is that the right strategy? Or is it better to be a little more perhaps conservative on the construction?
So that's new home supply. And at the same time, you have really rising secondary supply out there. And, you know, it's really a funny moment in the housing market in a sense, because you have that supply issue and then affordability is the real problem. So does that mean that price resolves this at some point?
Not yet. I mean, Ivy does predict that prices will go negative nationally very briefly next year and then rise again in 2027. Whether that happens, she said she's still not even sure about that because, again, it's these pressures on who's in the market. If you look at supply specifically, the supply is actually on the low end, you have sales being the lowest and supply the highest, which means that the low end buyer cannot get in even to that low end home. And so that supply is really high. On the luxury side, you see more buyers, but you see far fewer homes available for sale, which again pushes those prices higher. And if you really have the higher end buyer, the only action in the market because the lower end is still renting, then you're going to see prices continue to go up because that's going to be how the median shows.
Interesting. So I'm interested to hear what you guys think about what she was saying, but we're going to jump into the housing market update after this update, which is going to be our mortgage update. And let's start by looking at this right here, you guys, which is the 10-year. Amelia is pointing out that timber prices are down substantially, I believe. I haven't looked this morning, but the last time I looked, they were down a lot. So here's the 10-year Treasury. Now, remember, this is what tracks residential mortgage rates. So don't listen to anyone. Just watch the 10-year Treasury. And it has gone down this morning about 3 basis points. This is going to drop interest rates probably under 6%, especially if you're shopping your mortgage the right way. But remember what happened, okay? Last time they started the rate cut campaign, which was last year in 2024, the 10-year Treasury skyrocketed upward. So it had the adverse effect that most people thought. So the same thing could possibly happen in a few days here, but watch the 10-year so that you guys can verify what people are saying. If you want to trust people in real estate, I don't recommend you do that. That's the path to bankruptcy. But if you are going to trust people in real estate, verify. And you can usually verify through the math. Now let's keep going. Here's the interest rates, guys. Here's 30-year. You guys see that it's almost under 6%. Now, a few things that I want to make a point with here. Now, the first thing is how to get a good interest rate. Okay, so I want to talk about how to get a good interest rate for a mortgage. First thing is your credit. So generally, the maximum credit score you can have is a 740, generally, sometimes 760. But if you guys have a 740 middle credit score, it's not the high score, it's not the low score, it's whichever credit score is in the middle is your qualifying credit score. And it's whichever borrower, so if the husband and a wife are on the loan, whoever has the lowest middle score is the credit score that's used to qualify you. So usually you get a better deal at a higher credit score of 740. But remember, it's not the interest rates that you guys see on your screen that are really changing every single day. The reason it looks like interest rates are changing every single day is because the par or the free-ish rate changes every single day because the pricing changes every single day. And another thing I want to remind you guys is if you're shopping your mortgage the right way, you should probably get a 0.5 point under what these interest rates are here. And if you are shopping your mortgage, remember, do your shopping all at once over a period of a couple of weeks because you have a grace period for the inquiry that's run on your credit. So if you have a mortgage company run your credit, make sure to send your file to a few other mortgage companies and shop your loan because they vary drastically. And another thing, you guys, normally a broker is cheaper than a direct lender. Now in the upper left right here, you see that 6.29. That's a conventional. You see the FHA is 6%. The only reason that conventional is better, one reason really, is because of mortgage insurance. With conventional mortgages, even though the interest rate's higher and it is credit score driven, so if you don't have good credit score, your rate's going to be way high on conventional, as is your mortgage insurance. But once you have about 20% of equity or 22%, depending on when you purchase the house. So if you've already purchased it and you want the mortgage insurance to automatically come off of a conventional, it has to hit 22%. But if you have a down payment of 20%, you don't have any mortgage insurance. But I want you guys to understand that the main benefit for conventional versus FHA is mortgage insurance. Everything else, practically the benefit goes to FHA, except for the mortgage insurance. Now, a few things I want to show you guys. This is the most important thing. If you guys ever want my blessing to go purchase a house, you have to understand what an amortization schedule is, because if you don't understand what this is, you will be enslaved to debt for your entire life. The name of a mortgage is a death contract. So there are ways to get ahead. But the first thing I want to confront here and I want to talk about is how much more expensive it is right now to own versus rent. Now, you probably heard a lot of these bozos saying, oh, you're a sucker if you rent. You're just going to give your landlord 100%, right? Or you're going to pay them, you're going to get them rich, blah, 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 blah. And 100% of your rent goes towards wasted. Well, what if I told you guys that roughly so if someone says it, say that's fine, but 300% of my money would be wasted owning a home. So 100% to rent, but 300% to own. And the reason that is this amortization schedule. And I want you guys to know that this is not counting property tax, insurance, HOA, maintenance, or repairs. It's only your interest. So if I get a loan of $400,000, okay, if I get a loan for $400,000 at today's interest rate of 6.29%, I pay back over the life of this loan, okay, $890,000 or $490,000 in just interest. So the interest exceeds the principal, meaning that it's over 100% because the interest is exceeding the principal. But what happens, guys, when I tack on property taxes? I pay $14,000 a year. Tack that on right there for 30 years. What about homeowners insurance? It's $3,000 a year for homeowners insurance. Tack that on there. HOA, it's about $1,000 for HOA a year. Tack that on there. And when you keep tacking it on and tacking it on, tacking it on, this can get to 200 to 300%, which I'm telling you this because you got to be very careful buying a house. I think that everyone should own a house. Owning a house could be a great thing. It's just right now, it is very, very bad, very, very toxic. And all people should wait until they find a deal of their dreams using the math. Now, I wanted to show you guys the power of paying down your principal. So you see all of these things, these numbers highlighted in yellow. You guys can save all of this interest right here. Okay, so this is 5 years of interest. Each row is 1 year of payments. Okay, so the first year you're spending $25,000 in interest and only $4,600 goes towards principal reduction. So if you guys were to pay your loan down by $26,000, so if you paid this $400,000 loan down to $373,000 with a lump sum payment of $26,000, you would save all of these years of interest, which would save you guys $121,000. So you get 5x on your money back. Okay. The first 10 years of your mortgage, it is the most important time to pay your principal down. So if you want to get ahead and you don't want to be trapped in this rat race, like so many of our neighborhood and constituents and American citizens are, you don't have to be. Just pay your principal down early. And remember, if you refinance, this starts all the way over again. So don't refinance whatever you do. Now, I also want to show you what happens if you don't have $26,000 and you just want to pay extra payments per year. Okay, so I'm going to show you guys what would happen is if you paid 2 extra payments per year, which would total $4,946 per year. So that's 2 extra payments per year. Okay, that's it. So $5,000 extra a year. You guys pay this loan down to a 20-year loan, 20 year, 5 months. So you basically shed 10 years off that loan. And the thing is this, by you guys paying down principal, that's just your money anyways. You get that money back if you were to sell. So it's not like you're spending it on a fee. You're just paying the loan down, so you're building your equity. But look at how much interest, guys. Okay, you would save if you did what I said, you would save $180,000 in interest by just making 2 extra payments per year. That is the power of paying the principal off and not being a victim of interest. So make sure you understand how this works right here before you're out there in the housing market. And again, this is called an amortization schedule. You guys can go to calculator.net. This is free, but I would suggest you come here to play around with it to see how it works, because you need to educate yourself on how this works, right? You don't want to be a victim here. Now, we're going to go into this real quick because this is going to lead us into talk about closing costs and something called a loan estimate. Now, I'm so intrigued by this because I've been a loan officer for 20 years, so I know everything that they're talking about. But this is Fed Governor Cook reportedly declared second residence as vacation home, contrary to Trump claim. Now, here's what this is saying. Okay, and this is so interesting to me. A May 2021, here's the key word, a loan estimate provided to Cook by a credit union shows that she had indicated to the lender that the Atlanta property would not be her primary residence, but would rather be a vacation home. Okay, and this is contrary to what the Trump administration says. So here's the key words I want you guys to focus on: loan estimate and vacation home. So they said that they have a loan estimate that shows vacation home. The only problem with that is, guys, is loan estimates don't indicate whether a property is a primary residence. So whoever's talking about this is wrong or flat out lying. And I'm going to show you that here in a second. So the other thing that I wanted to tell you guys is a loan estimate is what? It's an estimate. It's not a final document. So a loan estimate can change 5, 6, 7 times during the transaction. What you need, if you really want to see what she did, is called a CD, a closing disclosure, not a loan estimate. But that's what they're saying. And the other thing, again, even if it was final, which it's not, it's just an estimate. So it's not even a final document. It doesn't have anywhere on here that indicates whether it's a primary residence. So whoever is writing all these articles didn't even look at a recent LE. And this is the Consumer Financial Protection Bureau. Okay, you guys are looking at a loan estimate. It is 3 pages long. And if you come through here yourself, if you want, there is nothing. They have the loan purpose right here. It's a purchase, fixed rate, conventional 30-year, but it doesn't indicate whether it's a primary residence. And that's page 1. I'll show you guys page 2. Here's page 2. Page 2 is the closing cost, and you're going to want to pay attention to A right here, the origination charges, because that's what you can really shop, right? Those are your closing costs, predominant amount of closing costs from the lender. And let me show you guys page 3. Nothing. Loan estimates don't have whether the property is a primary residence or not. So it's, to me, it's shocking that they're saying this, because they literally picked the wrong document. And it's not a final document. It's a make-believe document. Now, as far as the vacation house, that's just another name for a second home. Now, I wanted to let you guys know, if it's a second home, you can't do an FHA. It must be a single-family residence, and it must be available to her for half the year. She cannot turn it into a long-term rental house, okay? So, because it has to be available to her, because it's a second home. So if she did any of that, well, it's a problem. And the problem with those loan documents, there's no statute of limitations. A lot of those are federal documents, which is not good. Again, the loan estimate doesn't even have a section for primary residence. It's kind of crazy. But all of that to say, just make sure you guys understand what you're signing, right? And make sure you understand what document is what document, because there's so many documents when it comes to purchasing a mortgage, it gets very confusing. So just stick to the math. Watch some of these videos, take my free course, and it will help navigate you. Now, Mitch, my question for you is why, and then we'll get into the Amicus, but why is paying off your mortgage early such a great investment?
Paying it off is one of the only protections you have. So I want to explain something quickly. Equity stripping is what occurs when the central appraisal districts create a fraudulent tax, and that fraudulent tax is literally taking your amortization schedule, what would be your money in your pocket, your principal pay down, and turning it into their gain by virtue of the fraudulent tax. That's equity stripping. But then it gets worse when that equity stripping, the money put in their pocket, ends up in the hands of the school districts who lever it up in the form of bonds. So all property owners, including mom and pop, have their money being stolen, not once, but twice. And then further to that, you end up losing your ability to invest in things. So paying down the mortgage is one of the protections that you have, but that assumes that you've got a home value that's justifiable, where if the market drops and when the market drops, that you're protected, because otherwise you end up being upside down. So, and to the other point of the schedule that Travis was showing, which is the amortization schedule, you should look at a home affordability calculator and be very conservative in your approach. In other words, don't state things that you know, well, things are going to get better in the future, so I'm going to kind of massage these numbers a little bit. Don't do that. Tell the truth to yourself so that you're not deluding yourself to understand what you can afford, because this equity stripping is real and it bites. It's a big deal because it's going to cost you an awful lot of money. So over and above that, when you see the combination of these things, these two items, be it the equity stripping and the home affordability, then you can paint a picture for yourself to understand where you're going. But there's no better situation and no better feeling than to realize that you didn't get caught in the trap because you had the education to avoid the trap by listening to everybody's noise, which is designed to paint a picture. And with regard to Market Watch, I'm not a fan of any of this because Travis and I have gone on this trail with Market Watch several times. Their editors either need to state that they're painting a financial picture for purposes of a narrative on behalf of a certain party, or they're not doing their job. But this is another one of those pieces where clearly the writer didn't do their job. And so one must ask, why is it? Why is it the writer never even looked at a loan schedule, a loan estimate? Point of the matter is, what is coming out of Market Watch isn't believable. It isn't trustworthy. Market Watch, you could be better.
Mitch, excuse me, some would argue that we can all be a little bit better. And why not? Well, why not push ourselves to be better? So no offense, Market Watch, just get better, right? So I wanted to talk about this quote real quick. Now we're going to go into our next segment, which is page 4 of the Amicus. And I wanted to read this. I really appreciate you, Italian Stallion, aka the Gangster Bankster. This guy's cool. Bring on someone from Ohio that is part of the movement to repeal property taxes. Now, I've reached out to a couple of them. It's been a little bit difficult building that bridge, but I agree with you. And also, I wanted to tell you, Italian Stallion, make sure that they get the Amicus and they get the talk. I made a talking point page as well, and make sure they take the quiz, okay? Really, really important to do that. So we're going to move on. And I really appreciate the support, brother, from the bottom of my heart. Thank you for that. I am just an advocate now. So obviously you guys know that I'm barely making enough money to stay alive, right? Oh my God. So this is the second page we're going to review today. And remember, you guys, the reason why we're reading this is because we want you guys to be aware of what's going on with property taxes. And we really need your support. So if we're reading this and it hits you and you want to support us, remember, write a letter to the Texas Supreme Court. The information is in the description of this video. But now this is going to go into the affected constituencies. Okay, so the Texas taxpayers are facing foreclosure due to unsustainable tax burdens. The second one is agricultural community. So farmland systemically overvalued for taxation. And farmland is actually at it probably even worse, to be honest with you. Municipal bond investors are also going to be affected by this because securities are based on fraudulent valuations. Federal markets are going to be impacted because of RICO implications and interstate commerce violations. Now, here's some of the legal framework. Texas Supreme Court, Vexler versus Texas, constitutional challenge, and this is what he's referring to, which is Patel versus the Texas Department of Licensing and Regulation. The administrative exclusively cannot shield securities fraud from judicial review. And that's essentially what the Texas Supreme Court is doing. They're shielding these people from Mitch trying to get a resolution, which is absolutely crazy. Mitch was like, you can't do that because you've given us no outlet to hold him accountable, you crooks. He didn't say the crook part. Now, the federal jurisdiction. So he's saying that the federal government is going to get involved here. Number one, because of securities fraud. Okay. 2, interstate commerce implications. 3, national municipal bond market integrity. So there's also constitutional legal framework. Fraud is a paradigmatic legal wrong, yet the Court of Appeals decision bars property owners from accessing any judicial remedy. And that's the key there. So they're barring Mitch from getting any judicial remedy. The legislator cannot foreclose meaningful meaningful judicial remedies for recognizing injuries, forcing fraud claims into appraisal review boards, which is ARBs, entities without discovery powers, subpoena authority, or judicial over fraud denies the open court's guarantee. He's also cross-referencing this here. This court invalidated an economic regulation that imposed oppressive burdens. I'm pretty sure us in Texas, we're definitely being oppressed from property taxes, unrelated to legitimate government interest. Here, recurring taxpayers to exhaust ARB procedures for fraud claims. Because remember, the ARB is supposed to support us. If we have an issue with our property value, we're supposed to get to the ARB to confront that. But remember what happened to me. When I did that, I got assault and battered. And by the way, Steve Friends is due a response today. It's Monday the 15th, right? Yeah, Monday the 15th. So Steve Friends is going to respond today legally because we've sued him and he was the chairman of the ARB. You guys see the problem here? There's a massive issue. Last thing here, equal and uniform taxation. CADs have adapted non-uniform validation methods, arbitrary class codes, and data manipulation practices that result in gross discrepancies between similarly situated properties. This violates both constitutional uniformity requirements and the statutory mandate in Texas tax code. Very good, Mitch. Do you want to sum that up a little bit? You want to add anything to that?
Where this is going, the Texas bond program is insolvent. And what we're doing, in addition to asking the Supreme Court to reverse the Fort Worth Court of Appeals and remand the case back to the lower courts to be heard on its merits, which are clearly, the evidence backs up fraud on a mass scale. And this document is not just applicable to the state of Texas. This is the map for all states in the union. You can change little text words here and there, textual concepts, because some of the laws vary in terms of definition. But the document itself stands, and this is not a partisan issue. This is literally touching the lives of every single property owner and therefore every single citizen in the United States. The fraud has been committed. Nobody so far has been able to poke a hole in any of this. Well, therefore, this case must roll forward to be the determinant of fraud. And with regard to understanding the gravity of this situation, the state of Texas should not have access to the bond market in the United States. This isn't just a state issue. This is a federal issue. The SEC should walk into the Attorney General's office by virtue of their subpoena power and say, you turn over these documents that you were so flippant about with regard to your answer. And by the way, built into this amicus towards the end is a 15-page Freedom of Information Act document delivered to the Attorney General. Their response was, we are not the repository of these documents. They lied. We know for a fact because Mr. Mashburn even handed documents over to the Attorney General. They just simply were either too lazy or too stupid to go get it. But either way, the SEC has got subpoena power. They can walk into the Attorney General's office and say, you turn this over. If you don't, we're going to arrest you. The state of Texas should be denied access to the bond market until this investigation is done.
Impressive, Mitch. Now, you guys, I had a special talk with Mitch. He'll tell you before this live video. And I was like, Mitch, we have to be gentle when we do live videos. We don't know what's going to come up. We have to have everyone on our side. We can't create division. So you did really good there. But let's move on to our next thing, which is going to be a housing market report. And this one's going to be a doozy, you guys, because I am going to do, after we listen to this first video here, I'm going to do a market analysis on a property. I'm going to show you guys how to use the math to find the deal. And so we'll go over all that. But let me make a note here on when our video is going to be teed up at 48 minutes and 20 seconds. So we're going to listen to a video that's going to talk about the affordability crisis in the housing market. But one more time, a lot of respect for you, Mitch, for doing that amicus. Don't forget, you guys, we want you guys to read the amicus. It's linked in the description. Take the course on realestatemindset.org, and please send in a letter to support this lawsuit. We love you guys. Here's this video right here.
Is the dire straits of the real estate market. As Jerry was pointing out, reports on real estate suggest there are few buyers out there, Sales are 1.3% below where they were in the same time in 2024. Realtor.com says 7 out of 10 home buyers are priced out of the market. Mansion Global host Katrina Campins joins me now. The real estate market is in the doldrums. Do you see any signs of life?
Thanks for having me, Stuart, and hi, Jerry. So, you know what, Stuart, the U.S. housing market is facing a housing affordability crisis, and it's not just about mortgage rates. We don't have enough homes at affordable prices. Inventory is tight, prices remain stubbornly high, and new construction is bogged down by zoning restrictions and endless red tape. President Trump has made it clear he's ready to take action. While housing policy is mostly set at the local and state level, President Trump could use the power of the presidency not to overreach, but to lead. By declaring a national housing emergency, President Trump can spotlight the issue and put maximum pressure on state and local governments to reform outdated zoning laws, cut permitting delays and accelerate home construction. Costs tied to permits, zoning, and government approvals make up nearly 24% of a new home's sale price. And for multifamily, that number is 40.6% of total costs. Think of it as President Trump using his power to break through bureaucratic gridlock. But it's not just about influence. There are a few real federal tools that Trump can use to make an immediate impact. For instance, starting with capital gains reform. Right now, homeowners who sell their primary residence can exclude up to $500,000 in profits from taxes if they're married, or $250,000 if they're single. The problem is that cap hasn't changed, Stuart, since 1997, and home prices have more than doubled since then. So in a city like Miami, $500,000 in gains is not unusual, but because of the outdated cap, many longtime owners are choosing not to sell because they'd face a huge tax bill. That would be unlocking up inventory that could otherwise be on the market, and Trump could fix that. Also, by indexing capital gains exclusion to inflation, that limit could be raised closer to 1 million, freeing up homes, encouraging downsizing, and making it easier for young families to buy. Lowering mortgage rates alone won't fix housing, but it'll create demand, and then we have to fix the supply issue with more homes, more options, and more affordability. And if anyone understands housing, it's Trump. And I am very bullish about him being able to do something to really encourage change in the housing market.
Katrina, some of New York City's richest developers and landlords are convening to support Andrew Cuomo for mayor in an attempt to defeat Zoran Mandami. If Mandami wins, what do you think happens to housing prices in New York City?
Oh my God, it would be an absolute disaster. Florida would be happy because everybody would be coming to Florida, but I would be extremely sad for New York. I do believe that New York developers mobilizing is a good thing because it shows that they're willing to fight back against policies that could choke development, stall projects, and deepen the housing crisis. Real estate is New York's tax engine, funding schools, police, and infrastructure. So if building stops, the entire city suffers. By pushing back, developers not only are protecting investment and jobs, but also ensuring that new housing supply can come online. Something the city desperately needs. Their mobilization is also a signal of confidence that New York is still worth fighting for. And I get chills as I say that, but it's just so incredibly powerful to hear them finally fight back. The outcome will have national implications, since what happens in New York often sets the tone for other major cities. If Mandani gets elected, Stuart, this could be the last election that the people of New York see. So it's really time for them to stand behind and they have a very short amount of time to do so.
Okay. That was fun. All right, let me get the report up and ready for you guys. We're going to start with inventory, and then we're going to go into the market. I see you, Mitch. We're going to go into the market analysis after that, and hold on to your popcorn. We're going to get started right now. So here is the housing market inventory. This is the active listing count for existing homes. You guys can see it's starting to go down. Okay, so it appears that we're going into the seasonal months of where active inventory for existing homes starts to go down. But we are over pre-pandemic. Okay, you guys see that we went into the recession or lockdowns with 928,000. So we are over that. But when we go back before lockdown, say like 2018, we were sitting at about 1.3. Before that, about 1.3, 1.4. So we need normal-ish And this is not a normal market, but I'm just saying historically normal. Prior to the lockdowns for the last 5 years, we need 1.3 to 1.4. We're not shy $4 million. I'm sorry, 4 million homes. Whoever says that is an absolute shill. They're probably a realtor. They probably just want to talk up the housing market. We have 15 million vacant homes. We have an affordability problem, not an inventory problem, unless you want to say we have an affordable inventory problem, which is just probably going to get worse. Now, here is the inventory for new homes. And you guys can see here, when we add these two data sets together, we have more inventory, again, than we did pre-pandemic. Because look at where we were at right before lockdowns. We're at 5.7 months. We now have 9.2 months. The last time we had 9.2 months, let's see here, we just came out of the recession. No, we're still in the recession. So last time we were in a recession or we were going into recession. This is recessionary levels of inventory, because remember, one of the recessionary indicators is the housing market, specifically new construction. So what this is meaning is there's not enough demand in the economy to absorb these houses. And that puts a lot of pressure on those home builders to be forced to sell. Now, what we're going to do, we're going to do our market analysis now, and I'm going to try not to mess this up because I get so nervous doing this live because there's so much that can go wrong. So I'm going to show you guys how to do the math to find a deal. This way you guys don't have to trust anyone, and you can understand how to find a home that's under market value. Because just because a home says it's being reduced $20,000 doesn't mean it's $20,000 under market. It just means that's been reduced from its listing price. Now, the way that we start by doing this, guys, is all you got to do, you go to my website, okay? If you don't know how to do, if you want to come back to learn how to do this, take this very free and very powerful how to do a market analysis course. So take this. But for today, all we're going to use is a subdivision analysis form. So I'm going to click that, and this form is going to come up right here. So as I'm going through this, I'm going to be filling out this subdivision analysis form, okay? So I'm going to go back here, and I want you guys to first notice that in my market, there's 70,000 listings. I can't look at 70,000 listings. I got to clear the noise. So in order for me to clear the noise, I only want to look at homes that are under market value. So I pass all of this emotional stuff by. Okay, so I'm passing all this by. I don't care about all this. I only care about price per square foot. And I had to make a special field. It didn't even come with that. I had to add that manually. And so what you guys are going to notice is it takes 70,000 listings and it drops it to 3,000. So now the listings, let me pull up the map. All of these listings should have we still have to do analysis, but it should have a very high likelihood that these houses are under market value. And so when a real estate crash happens, that 3,000 can go to 20,000. And that's what that looks like. So again, these should be all houses here, okay, that are under market value. Where's this? So let's look over here in Kingwood, and let's look at a house that's potentially under market value, and let's do an analysis on it, okay? So here is a house right here. All right, so I'm going to click this house right here, and we've seen this house before. Now remember, the first part of this you guys could do yourself, okay? So I'm noting that the sales price is $350,000. Okay. I'm noting that the subdivision is Foster Mills Village because we have to do a local analysis. Real estate is about hyper-local data. So I'm noting the purchase price. I'm noting the subdivision. I'm noting the square footage because we have to do calculations. And then I'm just quickly noting the property taxes. And I want you guys to, real quick, let's just divert here. It's for sale for $350,000, been on the market for 66 days. Look at the property taxes. Okay. So look at these property taxes. Look at this. They've assessed this house. That's crazy, Mitch. $503,000. You guys see the problem? So, and I tell people this all the time. I could find houses under market value in Houston all day, like this one. But when I do the cash flow, and you realize they're being charged, they're paying taxes on an extra $150,000. It just doesn't work. Their taxes per year on this house, $12,000 per year. My taxes are actually higher than that somehow. But anyways, let's go back to the listing. Okay. So I've noted all that information. I'm going to come back to this form, and you guys see that I wrote down, you guys could do all of this yourself so far. I have the subdivision on top, Foster Mills Village. I'm going to do a 1-year comp analysis. Here's the property address, purchase price, $350,000. The size is 3,249, and I wrote the taxes here. Now what I have to do is figure out this. So this is the most important thing now. So everything you guys could do on your own, but this is where we have to do math. We have to figure out what the market home value is, but on a price per square foot level. So the way we do that is we're only going to look at Foster Mill Village. Okay, so I'm going to show you guys that now. I'm going to come back here. And I only want to look at, again, that subdivision. And I'm only going to look at sold property because remember, sold property is the comp. I'm going to look over the last year. So that's 365 days. And then I'm going to lock it down to the subdivision. Copy and paste. There's Foster Mills. Okay. Now stay with me, guys, because that's not all we have to do. Okay. There's 29 homes. So 29 comps. I'm going to hit results. Now remember, we don't want to use all of the comps. And I'm going to categorize this by size. We only want to use comps that are relatively similar in size to the subject property. So if the subject property is 3,200 square feet, I want to make sure to only select homes within a variance of 500 square feet from 3,200. So I'm going to uncheck the first three because they're too small. And then I'm going to go to page 2, see what's there. And I'm not going to select any of those because those are too big. You guys see that right there. Okay, so I've only selected comps. They're about 500 square feet in variance. Okay, so I'm going to add all these together and I'm going to divide by the number of comps and I'm going to just hit tabular. Okay, this gives me my price per square foot and I'm using the adjusted like after closing costs. So over the last year, the average home sold for $160.79 a square foot. That's very important. So I'll just put $160 right here. Okay, so now this is so easy. Now that I've figured this really important data set out, all I do is I bring up a calculator. Okay. I take the size of the house, which is 3,249. So let me take 3,249 times the average cost per square foot, right? For homes that are similar in size, right, guys? So I'm going to multiply that by 160 and it's going to give me my gross value. Now I say gross value because you may have to put money into the house like moving expenses, repair expenses, but I take 590 now, which is the market value hypothetically, and I reduce the purchase price of 350,000, and that's going to give me my gross wedge. Okay, 350,000. Geez, meaning my gross wedge is $169,840. Let me divide that by 350. Okay. So this home has 48% wedge. So there's proof. The proof is in the pudding. That is 48% wedge. You still can't buy it because the property taxes are through the roof. But that's essentially how you guys do that. And I'm going to go back over here. That was pretty easy. I hope we're already done with that. I hope you guys like that. But that's the simple math there. Now, Mitch, my question for you, and I'm going to tee up the Amicus now, is buying a home a good idea? Is it still okay to buy a home? Is that a good investment for most people, buying a house?
It's not a good investment if you don't understand what it is that you're looking at. You can make it a good investment based on the price that you pay. So if you were able to, as an example, get 3 to 5 years worth of real estate tax value, what they're hitting you with, the fraud, off the purchase price, and all the other elements of the affordability calculator stack, then absolutely. But that may mean getting a house that's on the market at, let's say, $160 a foot, getting it closer to 110 or 115. You have to do the research. You can make it a good purchase. But if it's not a good purchase, knowing where we are with regard to the real estate tax fraud and the school district bond fraud, why in the world would you want to open up your life to their theft? It doesn't make any sense.
Because, Mitch, the American dream, part of that American dream, on top of life, liberty, and pursuit of happiness, is owning a house. Didn't you know that?
Absolutely.
Which is probably why they took the rights away from us. Because the government and these power, they know the most important thing for us is that. So let's go into the last page of the Amicus that we're going to be reading today. And remember, you guys, we're going to do this twice a week. We're going to cover a few pages each live. Our next live is going to be this Friday. Make sure to come this Friday for that live. But a few more points here. D is takings without compensation. And again, this is page 5 now, guys. You can see it up here. When property is taxed at fraudulently inflated valuations, equity is stripped from owners without just compensation, amounting to regulatory taking. E, separation of powers, judicial review, allowing CADs to police their own fraud while invoking sovereign immunity removes courts from constitutional role as a check on executive misconduct. Remember, you guys, you know how hard it was for me to get someone to take that assault and battery seriously? Everyone's like, we can't do anything. They have special immunity. Please just follow our lead. We need your help. We need everyone to wake up. And so we're doing all this stuff. I get so upset when I think about this. Number F, letter F. By supporting a bond insurance process, CADs act as market participants, not merely sovereign regulators. Okay. Immunity does not extend to such proprietary functions, which prohibits statutory schemes that foreclose meaningful remedies. ARB's exclusivity creates a constitutional dead zone requiring judicial correction. So they're asking for, again, we want you guys to support here, please, guys. Immediate action required. SEC request. The Amicus Brief supporting the Texas Supreme Court constitutional review, federal investigation, coordination with state authorities. They've already investigated Texas schools and they found them guilty. Remember that. Emergency suspension of fraudulent bond approvals. We're asking the SEC to do an emergency suspense on all bonds. Texas Attorney General, Amicus Brief was sent to them, supporting constitutional judicial review, investigation of bond oversight process failures, enhanced due diligence procedures for future bond approvals. This is what we're hoping to gain. Mitch's. Our agricultural officials review farmland validation practices. And this is for small businesses as well. Some people are like, keep taxes for businesses, but you guys, the businesses, the small businesses, if we do that, they're getting frauded even more than the homeowners. It's so much worse when it comes to business property taxes versus residential. We just need to start over and we need accountability and transparency. But anyways, protect agricultural interests from fraudulent taxation schemes, supporting evidence. And obviously Jeff Mashburn, he's been on the channel twice. He has helped the FBI. He has historical documentation of fraud patterns. You guys can go to his website. His website is commonsenselaw.org. And he has been helping the enforcement agencies crack down on schools. Jeff is an absolute patriot. I'm sure he's not listening, but if he is, I love you, Jeff. Hope all is well. And Mitch, I just wanted to show the viewers real quick. And I also signed my own letter here, you guys. This is what we want from you. This is my own. You guys don't need this. If you look in the description, it's just a small body of paragraph. But this is what I wrote, and I sent it to the Supreme Court. Here's the case number. This is what we want you guys to do. I just said, my name is Trev Spencer. I'm the host of Real Estate Mindset. I was assault and battered. I pay $80,000 a year. Basically just saying that I fully support Mitch. Now, I also made this. This is absolute fire. Okay, because we were getting frustrated, especially with politicians not understanding what we were talking about. So we put the last 6 years of Mitch's work and the last 1 year of our work into one page. So we want you guys to download this form. You can go to my website. You can go to the link in this description. You can get this. This is the talking points on why we need to abolish property taxes. And it is just one page. There's 3 things that I want you guys to know, followed by the solution. And you remember that Mitch made the People's Bill to abolish property taxes in Texas. That's part of the solution. I need you guys to read this because this here, this one-page document corresponds with the amicus. Okay. And this here, where is it? Where's my quiz? So sorry. Let me just show you guys. This quiz corresponds with the things that I just sent you. So you see how easy it is to get here? You guys, please take this quiz. When you guys come to this quiz, it's going to have references as well. It's going to have the one-page document. It's going to have everything. And also, you guys, do not forget, here's the quiz right here, but do not forget, you can also go to Mockingbird Properties. This is Mitch Vexler's website. Especially if you're an attorney or you're just a patriot, go to mockingbirdproperties.com and then go to DCAD. It's up on the upper right here. So when I click DCAD, look at this. This is absolutely so impressive, Mitch. There's so much here for you guys. So again, I just wanted to reiterate that we do need your help. We are asking for you guys to be just the leaders. We want you guys to be the leaders, and we want you guys to take the message, and we want you guys to take what you're learning here, and we want you guys to spread it around your community, and that will help us conquer the apathy. And if you have a little extra time, 15 minutes, please write a letter to the Supreme Court of Texas and support the amicus, because this should help each and every one of us. I'm going to get him out of here, Mitch. We're about an hour and 8 minutes, but before I do, would you like to get us out of here?
you never know where all this information is coming from. And this case has been building, I kid you not, literally by the day. There's so much information coming in from across the United States. The attorneys here in Texas have done a masterful job given the box that the case is in just due to its age. But we are getting help. And with regard to Provocateur and his comment about Hillwood, that is Ross Perot Jr., if you can reach out to them, that would be one of those good sources to have. I want to point out that the attorney in Washington is a federal litigator whose initial training was that of an actuary at the London School of Economics. And if you want to see who he is, you can watch the movie Margin Call. He was in the boardroom. So the point of the matter is there are a lot of people that are participating to move this forward because the depth of this problem is not going away. And in truth, it's growing by the nanosecond. That's what cumulative compound interest does. This has got to get fixed. If it blows up, there won't be a fix. It'll take everybody down. I believe there are solutions. I have ideas. Certainly the bill solves the problem for mom and pop and all property owners. We also have to simultaneously focus on the bonds. The point of the matter is all hands on deck, and that's what this is going to take.
Agreed. And I really appreciate you saying that, Mitch. All right, guys, you guys can come back here. Everything is going to be timed. It's going to be timed. It wasn't time. I mean, we had a goal of 50 minutes. We exceeded that by 20 minutes, but everything is going to be chaptered for you guys is to be able to come back here. If you would share this video, that would be very helpful. If you go back to your YouTube account and you hit share, and that way it blasts it out to many other people, that would be really appreciated, you guys. And once again, we are really pushing for awareness. We're really pushing for your support. We will be doing lives twice a week. Our schedule is going to be Tuesdays and Friday mornings. So again, Tuesdays, Friday mornings for at least a month. We're going to continue to go over the amicus, and we're also going to issue quiz questions. So please, you guys, as soon as you're done with this, support us with a letter, take the quiz, get the resources from the quiz, and please engage. Okay, please participate. And please engage with what we're doing because, again, we need your help. And having said that, you guys, we really love you. We really hope you guys are out there doing the best that you can. And just keep emailing us. Stay positive. Love yourself. Help your neighbor. Don't get caught up in the system. And redefine what your goals are and how to achieve them. And other than that, if you're out there investing in yourself, you guys already know we wish you luck. And we hope you